Interesting corporate conversation on the sidelines of the City Treasury and Finance Conference in Jaipur. Our colleague Lata Venkatesh caught up with Suresh Narayanan, who is the chairman and MD of Nestle India, and began by asking him how demand is shaping up in light of the steep inflation and what they expect from the festive season.
This is probably the first real full year post-COVID where hopefully there will be no shadow of COVID.
Yes.
You know, otherwise till last year before last, we always had something or the other happening to dampen the whole spirits. I think this is the first Diwali after COVID.
After 2019.
After 2019, which will be a clean run, hopefully, God willing, a clean run in terms of COVID. I think there is still a lot of positivity that is left with people to celebrate the occasion, to celebrate the various festivals that are coming on. And one is seeing from the market also a fair amount of enthusiasm.
Okay, so last year you had a poor base, so yes, the number would be high. So you would do even better than that run rate.
I think we would do better than last year.
So a double digit is a given.
Not a given, but I would say that with a little bit of luck, we should be hitting that.
Okay.
I think the only dampener in the whole equation is the food inflation.
Yes,
you know, that is hurting. That's hurting wallets. Certainly, items which are up for discretionary expenditure, there could be some impact. They may cut down on particular categories or particular types of products. But by and large, I think it should be a fairly robust and decent festive season for all of us.
Do you see premiumization continuing? Do you expect more expensive products to do much better?
I think Lata, this is a concept that is now accelerating, and one is seeing that, you know, earlier we used to have, if I launched a 20 rupee product or a 40 rupee product or a 50 rupee product, it was already considered to be premium.
Okay.
Today, in some of my categories, I have products at 100, 200, 300, 400 rupees. And there are consumers for it.
Okay. So the premium products are growing
yes,
much faster than
yes,
the mass consumption
yes,
products. Okay, now let me come to margins. While some food raw material prices are higher, probably the worst is over in milk because the calving season will start now. So how will margins shape up for the second half?
Look, I think overall terms, 2023, certainly from a commodity inflation perspective, has been better than 2022. Because as I always say, 2019 plus 20 plus 21, the total food inflation was, commodity inflation was less than 22.
Oh, okay.
And now 23 now, I think wheat is stable, rice is stable, packaging materials are stable, fuel is stable. I think what is really cause for concern is coffee prices for us, because that's on the increase, and even milk prices. I would not be so definitive on them plateauing or weakening, because while there is, of course, the replenishment that is taking place of the herds, yet the cost of production has gone up substantially. Almost 30-40% has been the increase in feed costs. Now, farmers will have to pass that on in terms of price increases, yes, to retail consumers. And that can have somewhat of a dampening effect.
Okay. So margins, you would say, would
I would say that margins would continue to cause a little bit of pain, but the kind of serious concerns that we were having last year, I think those might be somewhat mitigated this year.
Okay. Now for the big question which investors have, is packaged foods going to be your next big category? Are you going to, explode into that category in a big way? Look,
I think, packaged food and beverage in this country is, if the total segment is about $800 billion, as they say, packaged food is just about $100 billion. So, and we are consuming, Lata, as you might be aware, China consumes 4 times per capita, yeah, the amount of packaged food. Even Philippines covers 3 times more. So the headroom and as I keep saying, focusing on the core and penetration-led volume growth would itself take us the next decade or 2 decades of growth. So just improving that quotient itself will give good returns as far as the company is concerned.
Okay, so your category is expanding.
Categories are expanding.
And you are expanding in it.
I'm expanding because I have, as Nestle, I think fairly strong positions in many of the categories. I think the equity and trust of the company, the partnerships of the company, and the overall resonance to Nestle, even in smaller towns, is going up quite appreciably.
That means new launches are planned?
New launches,
new product launches.
Taking existing portfolio and customizing it to smaller towns. You know, rural India today, and I was talking to, since we are having this interview in Rajasthan, I was talking to my regional sales manager this morning, and his small town growth is 3 times large city growth, albeit on a smaller base. But the sheer growth is 3 times.
It's impressive.
Yes.
Well, finally, would you also add to your brands through acquisitions? Should we hear some? Give me a headline.
Look, I think it's difficult for me, Lata, to give a headline like that. But I can only tell you that I think there is the quest for an acquisition is definitely there with the company. But let me put it this way: I'm not in a desperate situation to make an acquisition to accelerate growth. I think I have enough on my plate to make the core categories of the company itself rev up the engines and deliver growth.
Interesting chat with the CMD of Nestle India. Premiumization as a concept is only accelerating. He also went on to say that the rural sector growth on a small base is actually picking up and growing faster than the larger metro markets. And interested in an acquisition? Not a daring hurry, but there is enough in their core business to drive growth from here on. Well, out of time on Midcap Radar, your stocks when we return.